you'll need to see us here. Welcome, everybody. Happy Friday to all of you out there. This is not Jason Witten. Where is it? Where is it? No, it's over there. It's down there. This is Andy Fenton here, Wealth, Wine and Wisdom on a Friday. Hope you are all doing well. Jason is out there rock climbing at the moment, and hopefully will be dialing in to join us throughout tonight's episode. But in the meantime, please give us a shout out if you're there. We'd love to have a chat with you. Might even answer some questions. As a matter of fact, that's what it's going to be about tonight, is to answer as many questions as we possibly can while we wait to the J-Man to come on board. But while everyone's coming on board, please let us know that you're here. Whack your name in the chat box. Let us know whereabouts you're dialing in from tonight. And say a holler to Jason, who is doing a live stream from rock climbing, which we'll talk a little bit about shortly. Hey, James, how you doing? Good to see you. And we're going to have a little bit of fun tonight. So those of you who have had a whole lot of questions, Charlene, good to see you. Or Sharon, sorry. Good to see you on the call. Hope you're all well. While everyone's dialing on, just a bit of an introduction. It's Andy Fenton here. Jason is going to be dialing in shortly, hopefully. And this is Wealth, Wine and Wisdom for our Friday night, our typical catch-up for a debrief on the week that's been and potentially what's happening. This came from a little bit over a year ago now, when COVID started to strike our community here in Australia. And Jason and I used to get together to debrief what was going on in the world, because there's been so much happening, and we're almost back in that same spot again with the amount of information, with the amount of things that are happening in the market. So what we do is we spend the time on Friday to have a little bit of a wine, a little bit of a Friday debrief. For those of us in lockdown, we get a little bit of a chance to connect, and Jason and I answer as many questions as we can, and also cover off on a few things that have been happening in and around the world of wealth, finance, property investing, and help small to medium business owners out there. So good to see all of you coming on board. It's great to see you. Andrew, Bob, great to see you. James, wow, there's a number of you coming on board. So it's been a couple of weeks since I've been here, and Jason's been holding up the end appropriately, and thanks to Jace for doing that while I had a few other things to take care of. But it is great to be back with all of you, and really looking forward to Jason actually jumping on board. So guys, usually we have a little bit of a format for the session tonight. We usually talk a little bit about what's in the news and talk about what you should know. And there's been a huge amount in the world of property investing, in investing, and also around the grounds. So what I'd love for you guys to do right now, and I know that we've had a few questions shot to us before the show, but love for you to spend the time, put some of your burning questions into the comments field below on whatever channel you're dialing in from, and we'll endeavor to answer all of those. And look, I'll just jump off here. Mike, hopefully this is a little bit better for you. And just let me know if you cannot hear me, and we'll start to crack into things. So just while we're coming on board, Aaron, great to see you, mate. Happy Friday. James, mate, good to see you on board, and Bob and the rest of the gang listening in from Hobart, mate. I hope things are all well down in Hobart. Haven't heard too much from down there recently, so hope you're all keeping well. And we've already got a few questions that are coming through. So, Jason, if you're out there, mate, dial in. We'll look forward to catching up with you. As I said, Jason is on site. He's experimenting, doing a little bit of a live rock climbing. For those of you who didn't know, Jason is an avid rock climber, and he's out there breaking the boundaries of technology and introducing rock climbing to the world. And hopefully he'll be dialing in shortly to join us. So let me just get my run sheet up for today, and we'll tackle a little bit of what's in the news. Crystal clear, Alison, thank you very much. Hopefully all of the information tonight is crystal clear as well. We can only hope. And Bob, I'm 20% down. Is that on investments, mate, or just on volume? Interesting to know. Hopefully it hasn't fallen off the rock, Bob. Well, it's good to see that there's some goodwill coming your way, Jace, wherever you are. So, guys, let's just jump into what's in the news, because while we're waiting for Jace to join us, there's been a little bit going on, a little bit that I've thought has been reasonably comical as well. So, in usual fashion, quoting the old Yogi Berra, good fan from back in the day, a nickel ain't worth a dime anymore. And some of the things that I've got to chat with you about tonight is inflation. And there's a lot of BS going around about inflation. There's a lot of scare tactic. Jason and I have been talking about it for quite some time, and wanted to share some insights in regards to what's actually happening in the world of inflation. What does that mean for you as investors? How can you take advantage of the various different inflation effects, and potentially what to look for within your industry? So if you've got any questions that relate to that, that's going to be pertinent to what we're going to go through tonight. And we will absolutely answer those questions. Sharon, I can see you've shot a question through already. So please, guys, flick them through. Keep the questions coming in thick and fast, and we'll do our best to answer them. As I said, Jace on secondment at the moment. And I'm really missing him tonight, because I saw in the news there's a little bit of moving and shaking going on. And the former Macquarie boss, for those of you who don't know, Macquarie Bank, big investment bank, one of the big banks in Australia. Many of you probably have home loans with them, and many of you have probably had investments with them in the past. And quite often, Jason and I have talked about regulation out in the market. And this is a really interesting one, because we've talked about regulation thrown in from APRA, regulating the banking and the borrowing sector. And we've talked about some of the over-regulation, the impact that that's had for you as property investors, and of course, business owners. This was a really interesting one, that Nicholas Moore has been appointed by the Treasurer, and effectively he's coming in to review what's actually going on with ASIC. So for those of you who don't know who ASIC is one of the corporate watchdogs around the industry. ASIC is basically going to be reviewed. Mr. Moore is coming on behalf of the Treasurer. It's one of the confidants, including advising the government last few years, managing Virgin Airlines, the restructuring due to COVID. He's one of the country's most experienced business figures, and led Macquarie for over a decade until November 2018. So they're actually bringing in a third-party consultant, one of the bigwigs from the investment banking sector, in order to have a look at ASIC's corporate governance. It's an interesting. It's going to be interesting to see how this plays out. This is one to watch, people, because it'll either go one of two ways. It'll either go more corporatized, and in our opinion, and certainly if Jace was here, I'm sure that he would concur with the fact that we need more regulation, we need less regulation, but more poignant regulation rather than knee-jerk regulation. And somebody who's been running one of the top-tier investment banks in Australia, actually jumping on board to review the operations of one of the regulators, could actually be an extraordinarily good thing to actually loosen up some of the regulation that exists within financial services. And we're talking about lending, we're talking about financial advice, we're talking about investing. So this will actually have an impact. So this is one that you should be watching in the news. We don't know how it's actually going to come about at the moment, but having a third party like Nicholas coming in, having a look at how the regulator is regulating, is going to be very, very interesting going forward. Whether it becomes more corporate, of which we would endorse, we'd love to see that there's a little bit less regulation, but a little bit more free market that's coming out in Australia, because we all know that we've got far too many laws that we're currently having to adhere to. But fingers crossed, watch this space. It's going to take over 12 months for this to come about, but I think you're going to see some really interesting points as this comes through, and hopefully with any benefit, a bit of common sense coming into the regulation space. So definitely one to watch. What have we got here? Let me have a look at this. Bob, down 20%. Oh, he says we're back into hydrogen, money lit back up. So Bob's talking about investing. So guys, keep shouting out where you're coming in from, and any questions that you've got. Tanya, good to see you coming in from Tullamarine in Melbourne. And yes, it was on Rebecca Miller's coaching call last week. It's good to see you on board. Sorry you're missing Jason at the moment, but hopefully he'll be dialing in very, very shortly. So good to have you on board. This is one that I thought was interesting, and many of the business owners out there will probably find this slightly amusing. There's an undertone to this that we'll actually explore in a little bit of detail. But keep your eye on this space. And this comes into what we're going to talk about in a moment about what you need to know about inflation. But some interesting articles that are starting to come about from the future and what the jobs market looks like in the future. One of the things that we know is a healthy economy has a low employment rate. A growing economy has a low employment rate. And this sort of flies in the face of it because there are a few different headwinds that are in the employment economy at the moment. And this article is a really interesting one to look at. One of the reasons it grabbed my attention is because it said why accountants will have to become security analysts in the future. And one of the reasons why I had a little bit of a chuckle about that is that there's some great accountants that are certainly in the modern era and using Xero and well and truly onto the it looks like we've got Jace coming in now. Look at this, and maybe what I'll do is I'll just bring him in. Let me pull out of this screen mode. Ladies and gentlemen, coming in from rock climbing, I think we've got Mr. Witten here. Let me see if I can bring him into the house.
Hello.
Jace, mate. I feel bad of bringing in a wine into what looks like a fairly physical kind of area that you're out there, mate. Talk me through it. Whereabouts are you? What are you up to?
Well, I'm here with my good mate Marty, and this weekend, folks, doing a little bit of volunteering for one of my my hobbies, my passions. I love a lot of climbing and bouldering. There's Marty there. Look, he's on the camera. But we have the Youth Bouldering Championships this weekend, and myself and Marty have volunteered to jump on over in the world of let me see if I can turn it around for you. Here we go, the front camera, done. There we go. I was going to try and turn it around, but it didn't work. But I'll show you guys around.
Maybe just spin around yourself there, mate. Yep.
Oh, yeah. Yeah, if you can see, a bit of the climbing in the background. Marty's there out filming for us, and the kids are out practicing. All the team are out behind me here. If you have a look at the climbing gym, it's got all of the climbing walls getting ready for the competition on Saturday and Sunday. So, myself and Marty, we're volunteering to live stream and commentate and do a bit of a live television show for the Queensland Youth Bouldering Championships. And so, it's going to be fun. I'm excited. We thought it was going to take a little less time to set up, and I was going to be there for Wealth, Wine and Wisdom team, but it didn't work out this afternoon. But it was good that I could jump on and say good day anyway. Hopefully all of you guys are well, and we'll get back around to the market analysis, and I'm sure you've been entertaining everyone anyway, Andy.
Mate, I was jumping into a bit of dry what's in the news, mate, but without you being able to banter a little bit off me, I was feeling a little bit lonely. We just gone through chatting about the fact that, and you'll love this, mate, and I'm glad that you're there, because as I was going through it, I thought sharing this without you just doesn't have the same impact, mate. But I read in the Financial Review. I'd love your thoughts on this. Nicholas Moore, who was the head of Macquarie Bank for about 10 years, about a decade, until 2018, has now been basically brought on by the Treasurer to review ASIC. So,
that's fantastic. I like that. Yeah, listen, I personally feel that they are, a law under their own. I've seen them bully and cajole, thousands of good financial planners, brokers, real estate agents, good people who are just trying to do the right thing. We all make mistakes in this world because the rules are so bloody complicated, Andy, as you would know. You've got to get a lawyer and then a barrister and then another lawyer and then someone else to have a guess at interpreting the law. But yeah, that sounds great because they're actually meant to do a proper good job of things. And I personally don't think that they have been. They let the banks get away with it. Yes, they got fines, but, anyway, I don't want to speak out too loudly. Maybe they'll come around and get into me.
But I thought it's ingenious for one of two reasons, because you've got an institution that is arguably one of the great chameleons of the finance industry, and probably allegedly pushed more boundaries than any other large institution in that space. So it could go one of two ways, couldn't it? You're either going to have them come in and share their secrets, and then holy shit, look out, we won't be able to squeeze a fart out without having the regulator knock on our door, or it might breed some common sense into the market, which will create more of a free market and ultimately better trade and investing for all of us. So it's an election year as well, so assuming Freudenberg is still there in 12 months' time when all of this finishes. But mate, it could be a good sign, could be a bad sign.
Yeah, you never know with this stuff, Andy. It could be grandstanding, or it could be something that is actually useful. So it's probably one of those famous wait and sees, isn't it? Really.
And I think, but definitely one to keep the eye on. I reckon it'll just slowly evolve over time, but should it get to the full 12 months race and it's still relevant, then I think the impact will be quite significant. And let's keep our fingers crossed that it frees up a little bit for all of us, because less regulation generally is a better thing for everybody.
Yeah, and what happens, Andy? You and I have seen this. The regulation actually forces boutique, small, good operators out of the industries. And what happens is just big monopolies, the big institutions end up, with big bad habits because they can afford to pay for the compliance, which is onerous and useless, and also pay for the fines that are inevitable because the legislation is so overzealous. And you and I have spoken about this many times, where really good quality small, and small to medium businesses in our space, 5 to 15 people in a boutique financial planning institution, or a boutique finance company, or a wealth creation business, they can be put out of business overnight because they have to, pay for literally hundreds of thousands of dollars a year in compliance and other things, which, the big boys can afford, and the smaller ones, they can't. So, I think it'd be great. It'd be nice for all of those good quality operators to get a bit of a break, because they've been absolutely beaten for quite a while, and I just think it's not okay. So hopefully it's the latter, Andy, not the former.
Hopefully, because you and I both know that it tends to be a lot of the smaller operations. There are some, examples of larger operations that do things and in a non-sausage factory type of approach. But quite often it is the smaller operators that are quite dynamic, because they are small, they can be dynamic, and they can actually potentially provide a lot more value to clients, investors, and the community at whole.
100%. Yeah, a bit more bespoke, a bit more time with the clients, a bit more care. I think it'd be a good thing if it was the latter, Andy, for sure, mate.
Well, mate, it's interesting. I'll see if I can get this up for you, because I'm not sure if you can actually see this. I'll try and just
put it full screen.
Put it full screen for you. Give me 2 seconds.
Yeah.
I think you'll love this one too, mate. This was this made me chuckle. Let's be careful not to throw anybody under the bus. But mate, I was reading about this. You may or may not have seen it. It's on a job report data, and it said why accountants will become cybersecurity analysts. And I thought, mate, the last 10 accounting firms I've gone into had more filing cabinets than I've ever seen before in my entire life, and none of them were on a hard drive. And becoming a cybersecurity analyst, I thought that's a bit rich. But it was talking about the jobs that are not going to be here in the next decade and a half. And it was talking about how accounting as a broader industry is actually going to just become about number crunching, and is going to be policed by AI and cyber robots rather than physical people, and you and I have called them probably the police officers of
Yeah.
police officers for the ATO. But mate, it's almost scary to see that it's starting to evolve in that way, because at the moment we at least have them to be able to defend and be able to, allow us to go into, minimizing tax wherever we possibly can. But if it becomes algorithmic, it becomes a bit of a scary world, doesn't it?
Well, mate, you and I have talked about this, and it shits me, this idea of what your intention was, right? How the hell can anyone know what my fucking intention is, right? I know my intention, and it's bullshit. How can they write law around that? I just fucking don't. I don't understand. Maybe one day I would like to get an explanation from someone who's legal. That's not a wanker. Just someone try and explain it to me.
It's a short list.
Yeah, it's a short list. So, but that really points, Andy, to us, you and I talk about this all the time, you have to get the plan in place now. If that's going to be, if it's going to be watching like a hawk, algorithmic AI, mate, you gotta record, capture, monitor, plan it out years in advance, decades in advance, and that really will play into, I reckon, the people who are smart, who listen to you and me and many other good advisors. Like, this thing's got to be done with intention, with the future in mind, and start planning whenever you pay attention to this. Get the roadmap out there, and that'll work for people. But if you don't, then that's going to be a problem. And yeah.
My feel is with everything that's going on, they're getting some branding up behind you, Jason, just to fly the flag.
Yeah.
Getting the branding up.
The team will do it. Let's just give Pinnacle Sports a shout out, team, and then the team from Core Bouldering down here. There they are, all handsome chaps. They're doing the do here. So yeah, no, they're putting some branding up, and I'll send them the bill later on next week for a bit of the. Yeah, that's awesome. Yeah,
sensational. Well, but mate, my take on it was, and the reason why I wanted to single it out is and this is one of those calls that I reckon it's going to be a 5-year call or a 5 or 10-year call, because call me a little bit cynical, but down in the southern states, mate, we've got some pretty scary stuff going on about vaccination passports and things like that. And when I say scary, I talk about it from the perspective of it's a human. The rights that we have seem to be diminishing a little bit, and whether you're in favour or not in favour, that's not my contention and not what I want to talk about. What I do want to talk about is how fast the regulation's going to come on your passport. And what that is it's another government regulated app where you click into something and it takes your data, and if they're targeting these areas of accounting and tax, well, then that means it's another click and send, so the AI bots can get to it. So my sort of call on this is we've probably got maybe 5 to 10 years of good, free, more old-fashioned type of investing where we can be more creative, where we can be more entrepreneurial, where we can, push the boundaries, not in an illegal way, but in a perfectly legal way, but we can push them well. Because as soon as these bots come in, mate, they're literally going to be bloodhounds that never sleep, never stop, and are on the lookout. And then they will sort policy as it goes, because they will find the loophole quickly.
And to be honest, Andy, and to be honest, and playing the devil's advocate on this one, if we know what the rules are, then we can play the rules, right? But the point is, for you and me, that keeps changing a gazillion times a year, politicians and policies. I would just love it if they just said, here's how it works, there's the box, play in it, right? Because then you and I would maximize the box. You and I would maximize the outcome. That's what we do. We find the bestest, shortest, fastest, most efficient way to get there, the safest way. That's what good, clever people do. Maybe that gives us an opportunity to go, all right, well, they're not going to change the rules 75 friggin' times in the next 10 years. Great. That gives us, now we've got the plan, and all we've got to do is stay on track with the bloody plan. You know what I mean? So, maybe on the flip side, it might work out, Andy. But, today I'm being the optimist. The other week you were.
Well, mate, we have been locked down. The hair doesn't look too bad today because I don't know. It was a freak morning, but it's getting pretty scruffy down here, mate. I'm not going to lie. The personal grooming, I'm getting the buff head back, and it's getting a bit more grey down here. So the cynicism comes with it.
Yeah, it does, mate. Mine's gone a little bit long, and if I let it go too long, the grey comes in. So I'm due for a haircut too anyway. I don't think anyone wants to hear about us talk about haircuts, though.
So, mate, one of the things that you might find interesting, and I'll bring it back up on the big screen, is some inflation data. Oh, hang on, let me bring that across.
Flip it around. Yeah.
So I've been doing some research on the inflation figures because everybody had been talking about how inflation's going to be spiking and how it's going to be the thing that blows everybody up, and so there's a whole lot of the fear mongering going on in and around inflation. And I found a few interesting slides, and I thought you'd love this because if we look back in time and we go, I just love this from Bob, mate. He's saying, "Bring back the mullet." I'm not quite sure whether Bob's talking to you or me, but I'm pretty.
We've both sported a mullet once or twice in our life, Andy. That's for sure, and probably Bob has too.
But so, if we look back, and we always say that history doesn't repeat itself, but it's an incredible mimic. When we look back and we go, well, what was the great levels of inflation? What caused it? And what were the signals that brought inflation to the foreground, and really ignited the problem? And this was a great little graph because we've only got two here. We've got, so if we have a look at the great inflationary period of 1956 to 1982, which you might remember a little bit better than me, Jace, but I probably only mildly because I think I was, by the end of it, I was 3. And you're probably 4 or 5. Yep.
Yeah, I was a little bit older. Yeah.
But when we have a look at it to go, okay, based on history, how many of the boxes is it ticking? Well, high labour force unionisation, tick. Back then, today, absolutely not. It's not. It's actually the lowest it's been in about 30 years. Even though we talk about the unions and things like that, but the unionisation, very, very low. Household formation and demographics. Well, yes, that was a tick back then. Today, absolutely not. Like, it's not even on the radar at the moment. Even though there is land shortages, so on and so forth, it's not even an issue. The two boxes that are ticked is the easing of monetary policy, so more money getting printed and low interest rates. The easing of fiscal policy, and for those of you, the fiscal policy is government policy, and the easing of taxes, the easing of the funds that we have to give them. So one is monetary policy, is them putting money into the world. Fiscal policy is the relaxing of them taking money back out by way of taxes and things of that nature. But then when we look at the others that sit in there, we go commodity price shocks. Well, no, that was around in the great inflationary period. Not at the moment. Low to modest economic debt levels was massive back in the great inflationary period. It's not around at the moment. And strong wage growth, which is the one that you and I have been rabbiting on about the most.
Yeah,
it's just not there. And when we have a look at this, the consumer price index for the US over time, you can actually see that those two big spikes over there, the twin peaks as we call them. We're a long way off from that. And yes, inflation has shot up over the short term, but at the moment, these are the interesting spikes, and these are the ones that you'll love, Jace. This one, and again, the reason why we use US statistics is because they've got the most amount of data. But you have a look at the green line here. What do you reckon the green line is here? The blue line is average inflation in the US, and the green line is a specific, and Jace, I know it's like the chances of you getting this are slim to none, but you and I have talked about it. You and I have talked about how we could possibly turn over some quick bucks by monopolizing this phenomena that we've never ever seen, not in investment markets, just never ever seen recently, and it tends to travel around quickly, and it's a massive shortage of.
Shit, I don't know. Labour, timber, silicon. Bloody hell.
No, you've just named the other three graphs that I've got, but it's this is the second-hand cars and trucks. Second-hand cars and trucks have just gone berserk. Look at in the States, and I know in Australia the figures are actually
and it's happening in Australia as well. Yeah.
22, 23% price increase. Now, this is real data. This is actual real data. It's not just you and I talking about what we've seen out here by, offers on our cars and trying to buy cars and all that sort of stuff. 22%, and this was now a few months old in April, 22% gone off its nana. So when we think that rise of inflation back there that we saw in the previous graph has got this bizarre phenomena. What about this one, mate? You've already had a look at it, but what in your world has sparked off like this that is contributing to the cost increase of
well, the cost of timber, the cost of construction goods in Australia has gone crazy.
Mate,
up a long way.
This is lumber in the US.
Lumber, yep.
Consumer price, it is absolutely gone berserk. So the left-hand side of that graph is back to 2008, right? So 2008, it's been a ginormous increase in the cost of construction over in the US. And you and I were talking about it about 3 months ago, or even further, and we were talking about the price increases. Back then it was 30%, and it's continued to go up. Mate, and this one's the final one. This is the New Zealand house price index. And I thought I'd save this one to you, mate, because you can probably talk to this one a little bit better than I am. And I reckon you'd have a few happy campers over in New Zealand at the moment.
Well, I mean, if you can see, Andy, it's like everything's turned to gold. I mean, really, since 2016, 17, it's just been a long upward trend for the New Zealanders, and it's they're all living on a high. Right now, the New Zealand government is trying everything it can to claw this back. They've changed loan-to-value ratios for second-hand property for investors are now at 60%, so you have to put 40% in for investors. Owner-occupiers, gloves are off. Go for it. You can still get a 90% loan as an owner-occupier over there if you've got good income. So again, that now only just a few days ago, they announced more policies of tightening the servicing in New Zealand. But the challenge is New Zealand is just absolutely useless at providing enough property to its marketplace. And it has been for over a decade, since the GFC, basically. So it's probably over a decade now. Maybe it's pushing on sort of 12 odd years now since the GFC 2008, 2009. The GFC wiped out a lot of New Zealanders' good developers, and it languished for 7, 8, 9 years. It's struggling, and really, unless it has a lot of money invested in that sector, Andy, over New Zealand, it's not going to get back. So yeah, holy shit, exactly, Alison.
But it's the reason why I bring these to the table is because we're seeing these reports about inflation's running hot, so interest rates need to go up. But these are anomalous types of events at the moment. But I thought you'd like this one, mate, because you've got a couple of kids that are going to slowly get into this territory in the not too distant future. What age group do you reckon is leading the way in spending at the moment?
Oh, mate, I reckon it'd be the 15-year-olds to 22-year-olds or something. Are they out there just spending like demons?
Mate, they are. Yeah, they are leading the way by factors of millions. And just think about it, because what we've got in the graph on the right is we've got 56 to 64, we've got 45 to 54, and the reason why you don't need to know is because they're all pretty similar, right? But you would think that the 25 to 35 25 to 34-year-olds wouldn't be anywhere near it, would you? You'd think, no way in hell are they going to catch us? Because what are they spending their money on? They're not spending their money on, kids and houses and stuff like that. Like they have actually overtaken all of us. The 25 to 34-year-olds are now spending more than all of the rest of us. They've overtaken us, they've outshot us, and they're absolutely crushing it.
Well, Andy, the other day I did a little moment, a little thing on my little morning coffee chats. I'm just going to find myself a cord to plug in for my phone team, but just in case I go flat. But Australia's household saving $20 billion this year alone, 25 billion added in July alone. Andy, there's a demographic. There's an Australian demographic that's squirreling money away, saving for a rainy day, and then there's the others, who are like you. We've got all this money. All this money came back to us in grants and other bits and pieces throughout the COVID payments and relief, and people are spending. And I would expect, where are those graphs from? Australia and America, or
this is all US. This is all US data at the moment.
Yeah.
And what we're seeing is pretty much bang on, Jace, is that from 2000 to 2010, 2015, yours and my demographic have been saving money or decreasing our spending rate quite significantly. The 45 to 54s, they took a little bit longer to get on board, and but they've been decreasing. But the young ones have been accelerating at a rapid rate of knots.
Mate, well, and I don't know, Andy. Like maybe they're like, oh, this is the first time we've had a free bunch of money. Let's just get on it. Or they're like, they don't really think that it's worth maybe planning for the future. Don't worry about it. It's an interesting one, isn't it, when it comes to that stuff? I'm not really quite sure what's going through their mind or not going through their mind. In my head, I was thinking, well, this is probably the first time, a lot of people, you and I have talked about this, a lot of young people have ever had, a reality check when it comes to the world of money and job security and stuff, right? Like this is kind of, the first time ever people have had to have a good look at themselves and go, shit, I was 2 weeks away from being on the street. Lucky the government did step in. Do you know what I mean? So, I'm finding that quite interesting, actually, that there's a lot of spending, in that demographic. But maybe they're just a little bit less. Maybe COVID's not even like what's happened when people went through wars or depressions or something, Andy.
Well, mate, it's interesting you say that, because that's actually my takeaway from it. And I know, not Bob. I wanted to put Christina's comment back up there. She's gone, where the bloody hell are they getting their dosh from? I think it's the government and mum and dad, or as they say, Uncle Sam over in the US. But post World Wars, right? So, and you and I have spoken about this a bit, is that the only time in history that we can look at where supply chains have been as disrupted as what they are here, the only time in history is the Great World War, or not the Great, but World War II. And what ended up happening after that was a lot of procreation. There were a lot of rabbits around, which is a pretty natural celebration, which created a population boom. But there's also, when people are freed, they go out and they spend money, and they spend money en masse. And there's quite possibly a bit of a paradigm based on this whole COVID situation where people are going, you know what, live for today, don't live for tomorrow. And
well, that could be true, mate. Yeah.
Because who knows what tomorrow's going to bring.
Well, and that was a bit of a theme anyway, Andy. Really, you and I chat with a lot of young people, and they were investing in experiences, right? Money was being invested in experiences, not houses, for that millennial person. So that's quite an interesting one as you go. So, mate, I might have to chuff off sometime soon. I've got to finish off here.
Mate, give us awesome give us one more look around, and give us one more plug of what's going on, and the YouTube channel that we can tune into in order to see what you and the gang are up to over the weekend.
Yeah, mate. All right, we'll make us full screen there, Andy, and I'll do the quick quick ticky tour for everybody. So we've got Marty in the background. Have a look at that, folks. You can see the tech. And we've got, if you see over there, it says Core Bouldering. That's the Core Bouldering team. And you can log in if you're interested in seeing what it looks like. Core Bouldering on YouTube, and you'll see it all live streaming over the weekend. So if you catch us, you'll see Ian there.
Mate, jump up.
yeah.
Just run us over to that. There's a little part. Yeah, can you get up against the wall? Are you allowed out there?
Yeah, I can move around. No problem.
Did you want a coffee?
I'm good. Just some water would be great. Yeah.
Water?
Yeah, thanks.
Mate, there's a section there that looks to be upside down. Like it looks to have like
that's upside down. You get to
holy
climb upside down.
smokes! So you're telling me that there are people who are clawing to the wall like a fly?
Yeah.
And,
if you look over here, check it out. If you have a little bit of a look in here, there you go. It's upside down. Someone's going to have a go. Oh, there he goes. He's going to climb up there. Someone's getting in there. But
so these guys are almost upside down. So they're climbing on things that are more than vertical.
Yeah.
That's outrageous. Outrageous. So Core Bouldering and YouTube is the best place to find you.
Core Bouldering YouTube, that'll be the one. And if you're interested, gang, youth bouldering titles, me and the team are donating a bit of time and our expertise and our technology to make a pretty cool television show for the weekend.
Mate, time well spent. Good to see you, brother. Have a good weekend.
Hey, thanks, Andy, and good to see everyone online. Cheers, gang.
See you, mate.
Bye-bye.
Got a treat. So for those of you who are enthusiasts of the rock climbing, or even if you just want to get into it, or maybe just want to have a look at Jason and the gang climbing around and doing their thing, maybe a few thrills and spills over the course of the weekend, who knows? Tune into Core Bouldering, CORE Bouldering, and check out the YouTube channel and support the gang, guys. So tune in. So look, I might start to wrap up the inflation side of the equation, but if anybody's got any questions, now whack them in the chat box at whatever social media channel you're looking at. We'll finish up the great inflation debate, and then I'll address any questions that are out there, and see if we can have a little bit of a chat. So whack the questions into the box, and we'll just keep on cruising through. So you'll remember that, just to recap, we were talking about the great inflation markers that happened in the great inflation period of 1965 through to 82, and that we've only really triggered off on a couple of these things at the moment. And the reason why this is so important for investing is because inflation is the average price of things increasing. And at the moment, we're really only got two of the big factors, right, that are being ticked in comparison to way back in the inflationary times of, well, the beginning of my life, actually, to be fair. And this is one of the key things that everybody really needs to be aware of when it comes to inflation. And we've talked about it a lot. We've got some great data on it here. But the European Central Bank have come out. They have said that they will let inflation go above target, below target, before adjusting monetary policy. What they're really focused on is the employment rate. Number one, the employment rate. So they want to see more people employed in the world, in Australia, or each country are wanting, and this is almost universal. They're wanting to see more people employed, and then once they're employed, they want to see more wage growth. And here's the scary thing. So this is Australian Employment Cost Index now. So this isn't US data. This is now Australian data. So this is the wage growth, right, in Australia currently. And when I say wage growth, it's actually negative. So it's not wage growth. It's actually wage growth plus bonuses in Australia have actually come down. Now, there's a little bit of a tick there at the moment based on the data that we're looking at. But at the moment, we're well below average. And we want to be seeing wage growth in and around that inflationary figure. We want to see wages going up by inflation or more. And of course, inflation has spiked a little bit. So it's not probable that that's going to happen anytime soon, because more people employed means more businesses out there being mobilized, more money transferring around the economy. And as we talk about, money wants to move around the economy. And for those of you who are in Sydney or in Melbourne, you can understand some of the pressures that are going to potentially keep this reasonably low, right? Reasonably low for a period of time. For those of you who are in WA and Queensland, especially if you're in WA, it's actually a different story over there. There's some different metrics. The only state, I think, in Australia that's running a surplus at the moment, largely commodity-based, and the fact that they built a wall along their borders. I say that in jest. But here's one of the things. So if you are worried about inflation, one of the things that you need to be... So why would you be worried about inflation? Great question. The reason why you might be worried about inflation is when inflation kicks off, generally, they will raise interest rates. And what the banks are saying at the moment is they're not looking at doing that. And why would you be worried about interest rates rising? Well, if you're a property investor, that means it's going to cost more for your property, and that the property prices may come down a little bit, or it just taper off if the cost of acquiring that property goes up because interest rates go up. Why would you be worried if you're an investor in equities or in your superannuation funds? Is because as businesses, if the cost of borrowing money increases, then the cost that you go to borrow money to expand your business, that cost actually increases. It decelerates the growth of your company, or can decelerate the growth of your company, and on average tends to, which means to lower equity prices, lower stock prices, lower performance returns. So this is the reason why everybody is talking about this right now, but this is the reason why we wanted to show you some numbers around this. Bobby's just gone, why don't the government just raise the minimum wage? Well, Bob, they kind of tried to, and they did. The challenge is, mate, small businesses have to flip the bill. And when you've got businesses around Australia that are struggling because they haven't been able to be open, or perhaps, but there are also businesses on the other side, but businesses that haven't been opened, if you lift the minimum wage, then you're increasing the cost of employment on some of the smallest businesses or the small businesses around Australia. And what we know is that the small business sector in Australia is the largest single taxpayer in the country. At least it was before the pandemic started. So this country thrives. The politicians' wages come predominantly from the small to medium business sector, not the big corporates. They pay far less of the tax, and we might talk about that again in the future, because it's quite staggering proportionately how little larger companies pay as far as revenue to the government than small to medium businesses. We are small to medium business markets, and you are, as business owners out there, we are the biggest taxpayer in Australia as a combined, as together, which is the reason why we need to support small to medium business. So one of the big indicators that we need to be looking for is, as we see unemployment decrease, or as we see more people employed and the unemployment rate decrease, as we see wage growth start to kick in, these are the signs that the central banks, the reserve banks, the federal reserves of the world are all looking at as signals to then start to raise the cash rate, which is the interest rate that they lend money into the economy. And that, quite often, if they raise that rate, quite often it'll flow onto your pockets through rate increases on your business loans, on your mortgages, on your investment loans. And that is the effect that everyone is scared of, but everyone's saying it's happening now. But the data is a bit off. So look at the real data. Don't look at the bullshit headlines around the news, because the opportunity is really in taking the difference between the bullshit propaganda and what is actually really happening. And there can be that little arbitrage opportunity for you. Do your own research. Don't just listen to the headlines. And here's the other thing. So beyond a near-term spike in headline inflation owing to the base effect, the RBA continued to project very subdued underlying price pressures. But let's have a look at this next graph, which is hilarious. So let's have a look at how the economists of the world or of Australia have projected their expectations on where inflation is going to sit. So here we've got the forecast of inflation over time. Forecast for wages growth over time as forecast by the RBA. So let's see how often they've got it right since 2011. So you can see here, gang, expectations were high. Reality was lower. Expectations was for stabilization. Reality was lower. Expectations were high. Reality was lower. You can start to see a theme here. So these are the original estimates or the overestimates of where wages growth was going to come to for years. So this is their current estimate that's actually sitting there. And one might say, well, this might be a little bit of a Hail Mary. One might suggest that perhaps it is going to get up there, but it's going to be a slightly different direction over time in order to get there. And so these are the things that you need to be looking at. And these are the types of things that you need to know, is that these are the forecasts that a lot of the data that's coming out is actually based on. And this is the stuff that is then getting publicized. So understand the numbers, understand what they mean. Then you can start to make better decisions, more educated decisions around how you choose to invest, and at least ask better decisions of people like Jason, people like myself, when it comes to making big investment decisions, whether it be your superannuation, whether it be your investment property portfolio, whether it be your personal investments, whether it be potentially even your business and how you're choosing to deploy cash into the market. So, gang, I'm just going to scoot back through here and see whether there's what questions we've got. I know that somebody asked a question and it was a private question just the other day. How can I pay less tax? And the answer to that was be smart. No, it was in regards to cryptocurrency and a share portfolio or whatever the case might be. Very, very simple to the person who asked that question out there. If you've held an asset for more than 12 months and the growth has been, let's just say that you put in 500,000 and it went to 1 million, or let's just use 50,000 and it went to 100,000, you've got $50,000 worth of capital growth. If you've held that investment for longer than 12 months, and it's held in your own name, then you've got a 50% discount on that. So what ends up happening is if you've made a $50,000 gain, you use a 50% discount, brings that down to 25,000. That gets added to your taxable income for the year. Somebody I was on a call with just the other day, or rather on a presentation with, hopefully that makes a bit of sense. You're not going to lose half of it. You've got to cut the gain by 50% if you've held it for longer than a year, and then that'll be added to your marginal tax rate. Let me just have a look through the questions. If you've got more as I'm going through here, I'll whack them into the chat box. I'll get to a few of them before we finish up for the night. There's potentially one or two for Jason here. Sharon, I might leave that one for you for next week. I'd love for you to bring that back across to Jace next week if you're happy to. I'd prefer that he gives you the rundown for it because there's a bit of a story he will tell you. So tune in next week, Sharon, if you're cool to, and we'll definitely answer that question, repost it in and say, Andy, you promised that Jason would respond to me. Let me just look through the rest here. Sharon, okay, wonderful. Well, gang, it looks like if there's no other questions that are going to come through today, hopefully you enjoyed Jason coming in. Again, that's Core Bouldering. Core Bouldering, jump on to YouTube, follow Jason, the gang over the weekend. Thrills and spills. supporting a good cause, and great to be out there with the physical activity. Maybe even see Jace climbing some of those vertical or less than vertical inverted inclines out there. But great to see many of you on board. Thanks for the new support for a number of you who are running through presentations that we were doing during the week. Next week, it'll be back to the normal segment with Jason and I in here. There's a fairly jam-packed agenda because we've actually got a lot of stuff that Jason and I haven't been able to deliver together because I've been indisposed for a couple of weeks up until now. So we really do have a huge amount to get through over the next couple of weeks. So please tune in. And please, as I say, always make sure that you've got many questions preloaded so that when we come in, we can have more than just a glass of wine. We can actually answer your questions because ultimately, as most of you know, the reason why Jason and I started Wealth, Wine and Wisdom was in the middle of COVID, so we could dissect the legislation that was coming through thick and fast and translate it into easy to understand terms so that you guys can go out there and use that to create an advantage for you out in the community and share it with your friends. And I'd love to make a good shout out to a couple of you who sent me messages and sent Jace messages through the week, and you guys know who you are. I won't mention you all by name. I didn't get permission to do this. But please, gang, understand that when Jason and I jump on here, our intention is to serve. And we've got a couple of clients, or a couple of listeners, not clients, who reached out recently and said that they'd shared some of the information in regards to the government grants that we distributed out through here. And this is all factual data. This is all legit stuff that you can go and access. Jason and I quite often share tips, tricks, for those business owners out there and for those investors out there of how you can get subsidies, how you can get grants, all of those sorts of things. And they shared the stories about sharing the message and sharing the links that we provide you guys with literally tens of businesses out there each. And all of them had significant impacts on families out there. So our intention is to serve you. So please don't keep us a secret. You know, share the experience and share the messages that we're getting out there. And when we do put the links out there, it really is for the benefit of the community. So please make sure that you get into the right hands. For those of you in Victoria and like me, the Mexican, those of you in Victoria and for those of you in New South Wales, my heart is with you and hopefully you're all holding strong. Fingers crossed to a brighter weeks in front of us. We know what you're going through. And if there's anything that Jason and I can do to support, absolutely anything. If there's anything on your mind, any way that we can support you or support your friends, please let us know what those questions are so we can research them and make sure that we bring them to you on the Friday evenings with a glass of wine, because that's what it's all about. But for now, gang, it has been a pleasure spending a Friday with all of you. Thanks for listening. Please let us know during the week if there's any questions that you'd like us to prepare for. Otherwise, for tonight, it's good night from me. It's good night from Jace. Tune into the Bouldering, and we'll catch you all next week on Wealth, Wine and Wisdom. Have a great weekend.